Hey, this is Dylan Fry, the real estate guy, here to be your guy for any real estate needs in the Kansas City metro area. In this video, we are going to be discussing lending as it relates to the home buying process. So we are going to go through some myths around lending and help you figure out what's true and what's not. And then we are going to go through a step-by-step process on how you should start that journey into home buying and what it should look like finding a lender and finding the loan programs and what steps you should be looking at to go through on that. And then lastly, we're going to wrap up with some different loan programs, go through some qualifications to hopefully ease your mind and help you find out which loan program best fits your situation.
I go anywhere with you, 'cause you fill my mind, or you fill my mind. We could build a dream, start up something new, and the world is...
We're going to get right into discussing lending and the myths and the steps and also the different loan programs. But before we do, for more real estate tips in the Kansas City metro area, make sure that you hit that like button as well as subscribe to the channel, and then hit that little bell at the bottom so that you'll get notifications of when new videos are posted. Let's start off this video by throwing out some myths. I'm going to throw these myths out there. I'm not going to go into too much detail, but I know they're a concern on a lot of buyers' plates. And you guys are thinking about it and you're thinking about how am I going to make this thing happen? And throughout this video, I'm going to discuss different options that are it's going to be kind of like Mythbusters, and we are going to go through and we are going to break all of these myths and ease your mind and help you get your home buying process started. So the first myth is that you need 20% down. That's not true. And as we get further in this video, we're going to discuss what options you have out there to make the home buying process easy for you. Whether it's your first time buying real estate, second, third, fourth, it doesn't matter when. 20% down is rarely needed unless you're buying land. Now, the second myth is that you need perfect credit. I need an 800 credit score. That's what everybody talks about. Now, you may get better rates with an 800% or an 800 credit score, but that's not necessarily needed. And even if you have some things that need fixed on your credit, we can get you in the right path to get that started as well. The last one is I don't have enough saved. There is a lot of different options out there to help people buy a home. And there's different loan programs, there's different things that we can do in terms of seller paid closing costs and other options to get you closer to home buying and see if we can get it through and help you out and help you find a home so that you can start building equity and in a property and help you on your real estate journey. Now that we've discussed the myths and established what things could be weighing on you as you're trying to figure out whether buying a home is right for you, let's get into the step-by-step process of how you're going to find the right lender and the right loan program. So the first step in this process is find yourself a realtor, somebody that you trust, whether it's me or it's somebody else in your community or wherever or whoever it may be, a family member, a friend, an old colleague. But you have to find you a realtor, somebody that does this every single day, because they're going to be able to connect you with different people and help you throughout the transaction and make a lot of things that don't make sense to you. Because you're not dealing with it every day. They're going to be able to talk you through those different situations and help guide you to finding the right programs that are for you. Now, once you found a realtor, they're going to be able to connect you with a couple different options for lending. And I would say you got to find somebody that you trust. So if you already have a lender that you've worked with in the past, or that because you're friends and family with them, I would get options from them. I always caution people to get options from whoever your realtor refers as well, just because they're working with them on a daily basis. They know their processes, they know their habits, they know what they can do, and they may have heard something in the conversation with you, and the reason why they're suggesting that person is because they believe that person will specifically fit you or be able to help you make this transaction easier on you. Now, they may just have the same person that they refer out every single time, and it may not be the best fit. So again, that is completely up to you, but find somebody that you can trust and that's going to be easy to work with throughout this process, because this is going to be the biggest transaction of your life, and at least up to this point. And so you want to have somebody that you can trust. So once you found a lender, the next step is that you've got to get those two connected. So you got to make sure that your lender and your realtor are on the same page so that they can make sure that everything going forward in this process is customized to you. That comes down to both the search of houses that you're looking for, the amount you're looking for, so what you're pre-approved for, and then also the different areas that you're looking at, because not all loan programs fit different areas. And so you want to make sure that those two are working together to find the best house for you. Now, the last step that we're going to discuss today is let them guide you. So now that you've found a realtor that you trust, you found a lender that you trust, and you've got them working together, now you have to trust them and let them guide you, let them be open and honest, and give them all the information about your situation, because now with all that information, they're going to be able to find which loan program, which we're going to get into in a second, which loan program best fits you, and they're going to be able to build those searches and build exactly what you want in a home. So you've got to be open. Do you want something that's a bit of a fixer-upper, or you don't want that? Do you want to look in rural neighborhoods, or are you looking in downtown Kansas City only? You've got to throw that out there to them and make sure that they are fully aware of that, because everything from that point forward is going to depend on how open you are at that point, and the guidance that you're going to give them is going to help them give you the guidance on buying your new home, and they're going to be able to help you move forward. Now that we went through the steps of how you're going to find the right loan program for you, let's take a deeper dive into the different loan programs so that you're aware of what's going on when your lenders and your realtor are discussing those different options with you. So the first loan program that we're going to get into is FHA. Now, FHA is extremely common for first-time home buyers because it is a federally backed loan. It also requires little down, and it has a ton of flexibility in credit score and debt to income and other things to make home buying easier for a first-time home buyer. Now, the requirements for FHA are 3.5% down. So they're going to be looking at you bringing at least 3.5% of the purchase price to closing. That is a far number away from 20%, which is the first myth that we talked about in this video. Now, the second thing with FHA, you may be thinking, yeah, it's 3.5% down, but I'm going to have a great credit score to be able to qualify for that. No, the minimum credit score on FHA is 580. The big thing that they're going to focus on is debt to income. And I've seen lenders range from anywhere from 43, 45 to some lenders can get it as high as 51% on your debt to income. And that's going to be where they're looking at all your liabilities, so anything you owe, like a car payment or anything like that, plus the new house payment that you're going to be taking on, and then you would divide that number by what your monthly income is, and that's how you come up with that debt to income ratio, which is going to be the most important piece when it comes to qualifying for an FHA loan. Now, what are some additional benefits around the FHA? Another thing that you can do with an FHA loan is that you can have the seller pay up to 6% in closing costs. So what that means is take into account all your prepaids, insurance taxes, title fees, anything like that, maybe an inspection or a termite inspection, or say there was something else that needed inspected or anything like that on the loan, maybe buying points to get a little bit lower of an interest rate. With this option through FHA, you can do up to 6% of the loan. So that means if you're doing a $100,000 loan, then you can do $6,000 in seller paid closing costs. Now, what are some pitfalls of FHA loan? A lot of times the big thing that sellers are worried about when doing an FHA loan is that there's additional inspections that come with them. So not every house is going to qualify for an FHA loan. And a lot of times that's going to be around chipped and peeling paint. Maybe there's not a handrail where there needs to be. With these being federally backed loans, they want to make sure that you're not going in there and you're going to have to spend a ton of money. So if you're looking for a fixer-upper, this is not going to be the route that you're going to want to take. The next two loan programs we're going to get into is both our VA loans and our USDA loans. So these two loan programs, both of which are 0% loans. What does that mean? That means that you have no down payment. Now, with that being said, the requirements for a USDA loan is higher than they're a lot stricter because it's a federally backed loan as well as it's 0% down loan. So they want you to have a minimum of 620, then they would want some additional conditions, or at least a 640 to qualify for a USDA loan. Now, USDA only there has certain areas, so it's for urban development. So you have to make sure that you're following the mapping system, and that'll be a spot where you'll rely heavily on both your realtor and your lender to discuss whether a house that you're looking at is USDA eligible or not. Now, on the VA side, they are a little bit more lenient with the credit score. So they're going to be looking for a 580 minimum, but you have to have your eligibility through the VA. Now with VA, you do not have to follow that mapping system though. Now, when it comes to closing costs, though, you do have the benefit of, with VA, you can go up to 4% of the purchase price. So if you're buying a $100,000 home, then you would be able to have the seller pay $4,000 in closing costs, and then with the USDA you can go up to 6%. But that is going to, some of the different lenders and loan programs are going to vary on that specific thing because it's going to come down to underwriter approval. Now you may be thinking, what does that mean, the underwriter approval? Well, that's where it's going to come in handy to have a lender that you trust and a realtor that you trust, because they're going to know what situation and the questions that they need to be asking up front. Because one thing that underwriters are a little bit weary of is getting people into home without them having to pay anything. And when you got a 0% down, 0% loan, and you've got closing costs being paid for, you're essentially walking into this house with very little skin in the game, other than you're making the monthly payments. So you want to make sure that everybody is on the same page, and this goes back to connecting that lender and realtor to make sure that when you're submitting an offer, that everything is going to go through those eligibility guidelines. With that, the eligibility guidelines in mind, these two types of loan programs do have similar to FHA, where they have additional inspections, and it's going to come back to that chipped and peeling paint, and they're going to have the similar guidelines of you need handrails and other things, and that you're not going to be able to use these loans on fixer-uppers. The last loan program that we're going to be getting into today is your conventional. That is your phototypical. That's what every seller wants. And the main reasons that sellers want conventional is because of those additional inspections. They don't want to have an underwriter come back and say, hey, there's chipped and peeling paint, you've got to repair that, or we're not going to give the loan. They don't want to have a handrail become an issue or anything like that. Any of those little issues, and then sometimes they're bigger issues. And with an FHA loan, there's no way to get it through without getting that repaired. Now, with conventional loans, you're not going to have any of those additional requirements. So therefore, as long as you get through the inspection period and you're happy with everything, you're going to be able to move forward with that loan. And it comes down to your preference and what you're willing to fix. With conventional, you may be going back to that first myth of, well, yeah, I can go conventional, but I'm going to have to bring 10, 20, maybe even more % down to qualify for a home. That's not true. A lot of conventional loans nowadays have first-time homebuyer programs that can go 3% down. as well as even if it's your second, third, fourth home that you bought, you may be looking at, as long as it's a primary residence, you're going to be looking at 5% down is what you're going to have to bring. So it's still considerably lower than 20 or even 10%. Now, if conventional offers the same thing, why wouldn't everybody just go conventional? Well, that's where the requirements come in. Is conventionally has a lower debt to income ratio. So they're going to want you to be closer to that 41% or maybe even lower on your debt to income ratio. As well as they're going to want a higher credit score. So they're going to be looking at your minimums are going to fall in the 620 range. And then, but they're really going to want that debt to income low if they're looking at 620 to 640. And then after you get above 640, a lot of times you can work into a conventional system. Today we have discussed a lot of different information, starting off with some myths of real estate. Oh, I need 20% down. I've got to have great credit. And then what steps you need to take from finding a realtor, finding a lender, getting those two on the same page, setting up your home search, and then also going through some loan programs that lender could offer you. And with all that being said, that is a ton of information. And I just want to remind you that throughout this home buying process, as long as you surround yourself with the right people, you will be okay. There's going to be a ton of information that's coming out. It's going to be like trying to take a drink from a fire hose. It's a lot. But remember, you have people, and going back to our steps, you found people that you trust to help you make the biggest transaction of your life to this point. And with that being said, if you have liked this video and would like more real estate tips for the Kansas City metro area, then make sure that you hit that like button, subscribe to the channel, and then hit that little bell to make sure that you get notifications when we post new videos. Again, thank you for your time.
I go anywhere with you, 'cause you fill my mind, or you fill my mind. We could build a dream, start up something new, and the world is